Gold and silver, I like a lot. I think gold and silver in the next cycle probably will be the last guy standing. So, even oil will peel off somewhere along the way, but late in the cycle. Well, I think gold and silver probably go right to the end of the cycle, just like Nvidia goes right to the end of this cycle. So gold and silver will be your, they will be competing with oil as the top performers. I think certainly the other base metals and things will do very well too.
A little bit on the stock front. We, of course, have the MAG7 and quote unquote the other 493. The MAG7 is all dominant. Look at the great runs of NVIDIA. Look at what Meta's doing in AI and paying sports level packages to engineers. Google with its multiple Waymo and YouTube and business interest. Microsoft, a stalwart for 40 years. What do you think? You may think they may run like crazy the next couple of months, but a little bit more longer term, it's hard to imagine a world where a Microsoft, a Meta, strange how I didn't mention Apple, but they've been a little slow or a lot slow relative to AI, but they have massive amounts of cash. How do you think that could reposition the top 7 or 10 in the years to come?
Yeah, that's certainly not my expertise, so I won't talk very long on it. My guess is that there'll be winners and losers among that group. And there's probably going to be periods where AI doesn't live up to the billing, and certainly in the bust they'll struggle too. I'm, by the way, when I talk about a commodity cycle next cycle, doesn't mean there won't be winners in technology. I do think we will see, AI will play a role and maybe a big role, but it's just, I think inflation is going to trump all. The massive money and leading to an inflation cycle and commodity cycle is going to trump all. But no pun intended there. But I don't know. I mean, AI certainly is here to stay. It's certainly a productivity enhancer. But what we see always in these major things is the excitement initially, then leads to a shakeout. And some of the early winners don't make the right moves, or they aren't able to keep it up, and you get to a smaller group that are the winners. And then, at least we saw with the internet, then it takes time for it to work through the whole system, and then you have the beneficiaries of AI become a story as well. So, I am not by any means an expert in that area or anybody with any great foresight there, but certainly it's going to be an impactor.
The housing affordability crisis, mortgage payments now consume 35% of median household income, while home prices are up 56% this decade. In your bust, do prices crash hard, and does the market, or does it simply freeze due to unaffordability?
Yeah, I think certainly affordability is a huge issue, and that's not going to get better. Well, we'll get better because I do anticipate maybe a 30 to 40% drop in prices in the bust, and I might be low. It's hard to envision, but I'm starting to see it. I'm in New Hampshire. I'm starting to see it here. You're seeing price breaks. Things are staying on the market longer. There's more inventory coming out. I think people who wanted to stay on the sidelines thinking it was going to go up forever are now saying, oh, I think we've topped and we better get our house out there for sale. So I think you're seeing, and you will see that around the country. I know Florida and Texas are getting hit pretty hard because of excess supply. Some of the growth areas where people flocked, it looked like that was, a forever game, and it's not. So we're seeing a typical real estate rollover. I think it's just starting. I'm saying 30 to 40%, but that only takes you back to probably 2020 in many cases in terms of price. So we could go beyond that.
Right.
And then if you're printing, if the Fed prints $20 trillion, and again, that's a seat of the pants guesstimate of what it might take. But if they print anything close to that, that's going to lift a lot of boats. You're going to see housing get lifted. because, and I've said this, I fully anticipate we're going to have a 0% 10-year rate in the depths of the bust. Okay. So when things are at their worst, the Fed is going to be buying every bond in sight to get QE up to 20 trillion, right? There's no worry about who's going to buy our bonds. We don't need China. We don't need Japan. We don't need anybody else, because the Fed's going to be looking for every bond they can get to get 20 trillion out the door. Now, some of that is going to be because the Treasury is going to be increasing their bond issuance, because fiscal is going to be also expanding pretty rapidly. But anyway, so if you're printing $20 trillion to get the economy jump-started again, to save the system, save the financial system, it won't immediately translate when let's say mortgage rate's down to 2.5%. It's going to be 2.5% for those that really have pristine credit, right? At the bottom of the bust, banks are pretty stingy. They're being careful because they're in trouble. They only want the pristine credits then. And then coming out that first year in recovery, my experience is through many cycles that when housing goes down, it doesn't rebound right away. It's usually kind of a laggard in terms of the first year out, because you've got overhang, you've got a lot of foreclosures, you've got inventory, you've got, consumers still digging out from the bust. So that first year out, you may have a great opportunity in terms of mortgages and availability of money. So it may stimulate some, but it's probably not going to be a runaway V recovery in housing. They might bounce, but if they're down, let's say they're down 40%, and maybe they come back 5 or 7 or 10% from that. And then the second year, maybe the economy's a little firmer ground. People have jobs. Interest rates are still reasonable. They may be up to 5% mortgages by then, but still pretty reasonable. You could get maybe your best bounce that second year. And then I think by the third year, you're looking at double-digit mortgage rates, and that's a huge headwind that's going to probably prevent real estate from moving up from there. So I think the peak this year or this last 2 years, because a peak in real estate probably happened a year ago or more, that peak probably doesn't get revisited anytime in the next cycle. So, you might, if you're down 40% in price, you might get back a third of that or a half of that. If you're, and your activity is probably going to be a lot less, because if you've got an 80% bear market, people are going to lose a lot of money. Those that didn't get out, the wealth effect is going to be down substantially. And then if you have a 30 or 40% decline in home prices, that's the other piece of your big wealth that's down. And then let's say you lost your job, or your hours were cut back, what have you. So there's going to be a lot less people qualified to buy homes, I think. The government will probably be trying to come up with programs again and do things. And I'm sure during the bust, you're going to have all kinds of programs, just like you did in the pandemic, universal income type programs. But it's very hard for me to make the case that this isn't the peak in housing for years to come. Yeah, gold and silver, I like a lot. I think gold and silver in the next cycle probably will be the last guy standing. So, even oil will peel off somewhere along the way, but late in the cycle. Well, I think gold and silver probably go right to the end of the cycle, just like NVIDIA goes right to the end of this cycle. So gold and silver will be your, they will be competing with oil as the top performers, I think. Certainly the other base metals and things will do very well too. But I haven't forecasted gold for this cycle. I call it pre-bust, meaning it's probably by the end of this year, of 4,000. I had a forecast of 3,000, raised it to 3,400 sometime mid-year last year, I think, and then raised it to 4,000 when we were at 2,500. At 30, I think when we were at 3,400. I raised it to 3,400 when we were at 2,500. So I think 4,000 is a target pre-bust. Post-bust, I think gold can go to 20,000. And silver, I have a pre-bust target that I've had for quite a while of 75, again, end of this year type of thing. And my post-bust target probably, by sometime 32 or 3, 31, 32, 33, 20, 31, 32, 33. I think silver can get to 500. I do not follow Bitcoin. People keep trying to get me to follow it, and I go, as much as it's popular and doing very well, it's not a commentary on what the investment prospects are for it, but I don't consider it macro significant yet. It may be, but I want to see it get through the bust. I think crypto in general and Bitcoin specifically has not gone through a serious downturn, and this one's going to be the granddaddy of downturns to date. So let's see how it does in the bust. I understand the story. I understand the supply demand. I understand that it's outside the system and that adds tremendous appeal. And I understand that certainly we have a president that's friendly towards crypto and friendly towards Bitcoin. So I get all that. I just don't follow it enough for anybody to care about my opinion.